Hi, my name is Cecchetti. I'm a professor at the Brandeis International Business School, and today I'll be speaking about whether central bank digital currency is worth the risk. Central banks around the world are considering whether or not to issue digital currencies for use by individuals. A number of countries have already done it, but most of them are very, very small. A lot of countries are running pilots, and in the very large jurisdictions like the Euro area and the United States, central banks are studying whether or not it is something that they should do. At one level, this seems very odd. In advanced countries, at least, most of us use digital payments mechanisms. It's private money, but it's digital. And so why is it that we need the central bank to issue digital currency? What I'd like to do is talk about why a central bank might do it and whether or not it's worth the risks. So to do that, we have to weigh the costs and the benefits of this. So let's think about the benefits possibly of issuing central bank digital currencies. Remember, central bank digital currencies are a digital representation of the banknotes that a central bank issues now, the paper money that we used to use all of the time. And it sits on our phones in various ways. So what are the benefits that people have pointed to that might come out of this? Well, first, in some places, in certain types of payments are very expensive. Within countries, some payments are expensive in certain places, costing several percent of the cost of an item. In other places, it's very costly and often very costly to send money across borders. This tends to hurt the less well off, as it's small amounts that tend to be very costly. So when you have migrant workers who are sending money back to their families across border, that tends to be very expensive. The second argument in favor of central bank digital currency is that it could broaden access. Even in advanced economies, a significant fraction of the population does not have access or full access to the financial system. Those numbers run from a few percent in some places to as high as 15 or 20% of the population in other places. If you were to include not just people who have no access, but who have poor access to banks, even in very advanced economies, the numbers will go over 10%. The third possibility is that central bank digital currency, since everybody would effectively have an account of some sort, would allow governments to facilitate payments during disasters of various kinds. So we recently had the pandemic. The government wanted to facilitate payments to all people, which they basically did in some places. This would become almost trivial to do through the use of central bank digital currencies just by crediting effectively the accounts that people have. The next reason that people have given for wanting to introduce central bank digital currencies is to combat the issuance of very risky and sometimes not very welcome stable coins and crypto instruments of various kinds. These things tend to be quite dangerous to a lot of people, and it's not clear that they work very well, but they are taking off in some places, although right now as I speak they're not quite as popular as they were a year ago. They're still quite popular. And stable coins then, to combat them, you could issue central bank digital currency basically as competition. Another argument is that you could combat tax evasion and criminal use, because of course central bank digital currency would not be anonymous. Someone would know that you held it and they would know who you are. Let's think about what the costs are that are associated with this. So the first one, I think, is potentially rather large. If the private financial system comes under stress and people have the option of shifting their bank deposits into central bank digital currency, something issued by the government, it seems like they're likely to do it. They're likely to trust the government more than they trust a private bank, even in places where maybe they don't trust the government very much. So you would have the equivalent of bank runs and potentially panics where the funding was going out of the private sector banking system and into central bank digital currency. The second possible risk which is related to that, is that currency would come from unstable regimes, so unstable countries, countries where there really is a loss of trust in the domestic economic and financial system and political system. The residents of those countries would be able to shift into the central bank digital currency of a more trusted jurisdiction, a more stable jurisdiction. And they would be able to do that very easily because remember, central bank digital currency is just on their phone. And so they don't need to go anywhere. They don't need to obtain any special pieces of paper. They just have accounts, and possibly through a friend or something else, they would have those accounts. The third problem that arises is privacy. Do we really want the government through the central bank to know about everything that we do with our money? I think a certain amount of privacy is pretty important. And if governments start to misbehave, and in a number of places they have, and over history many of them have, do we really want them to know everything about us? Fourth on the list of potential risks and costs is that somebody has to do compliance. So one of the most important things that the private banking system actually does is ensure that the people that are transacting and the people with accounts are not criminals, and they're not engaged in things like human trafficking and terrorist finance or other kinds of criminal activities. Now, they don't do it perfectly, but they do it reasonably well, and we do catch a lot of people through the financial system. The question really, for me, is whether or not there aren't better ways to reap the benefits that people claim come from central bank digital currencies without actually incurring the costs. And here I would give an emphatic yes. So on payments and the cost of payments, we have a lot of things that are already going on that are effectively public-private partnerships. They're partnerships between central banks and private sector banks or payments providers. The euro area, I think, is already an excellent example of this. The euro area TIP system, which is a bank-to-bank payment system, clears individual payments in 10 seconds at a cost of 0.2 euro cents per payment. This is through a somewhat complex mechanism that is run by the European Central Bank and is run through a bank-to-bank payment system, which every central bank runs. Other jurisdictions already have things like this that are public-private partnerships. On broadening access, I would say that it's not clear to me that central bank digital currency would improve access at all. There are three reasons that I would give why it is that people do not have access to the financial system. The first one is they don't have any money, they're poor. The second one is they don't have easily verifiable identities, so they can't make it through these know your customer rules to ensure that they're not criminals. Whether they're criminals or not is a different issue. They could be completely law-abiding citizens, but if they don't have verifiable identities, then they can't get bank accounts. The third one is that they are actually criminals and they've been banned from the banking system. A remarkably large number of people have, in fact, been banned from banking systems for criminal activities. I'm not sure how central bank digital currency issuance has anything to do with any of these. What we need to do is we need to figure out how, first of all, to give people that don't have identities clear legal identities, and also for people who are very poor, how to subsidize the accounts so that they have access to the payment system. On the distribution of funds during disasters and emergencies, the government already has a tremendous amount of information about everybody and has simple ways of providing those benefits. On tax evasion and money laundering and illegal activity and criminal use, a number of things could be done there. The primary one, what I would recommend, is get rid of all of the banknotes in excess of 20 euros or $20 or something like that, and force all transactions larger than that to go through the payment system, where the banks are doing the job of ensuring that the people engaged in those transactions at either end are not criminals. In every case, I think there's an alternative where you could limit the risk, where you could gain the benefits and limit the risk at the same time that you would preserve the incentive for private sector innovation. And finally, let me make one final comment about what I think is an enormous risk associated with central bank digital currency. As I mentioned earlier, if the central bank issues digital currency, then what is likely to happen is that a significant quantity of funds will go from the private banking system into the central bank. Well, the central bank is going to have to figure out some way to ensure that the credit that was coming through the private banking system, remember the private banks take deposits and make loans, somebody has to still make those loans. Is it going to be the central bank directly? Well, that would be pretty bad. We don't want the central bank to become a state bank. Would the central bank lend the money back to the private banking system? If they were to do that, they would do it only on certain terms that would involve really ultimately the direction of credit, directing credit to certain favored parts of the economy. So overall, my conclusion is that issuing central bank digital currency, as appealing as it may sound to some people, as entertaining as it might be to have another app on your phone which then gave you access to digital currencies issued by the central bank, it's not worth the risk.